What is going on, my friends? Today's date is October 21st, 2020. My name is still Ryan Williams, and we are back with another video. Now, no matter what point you're at in your investing career, or, no matter how much experience you have with investing, I would be willing to bet at some point you have heard someone talk about how important it is to diversify what you're investing in. And the idea behind that is to spread your money out across a ton of different stocks, just in case one goes south, then the others can make up for it. Makes sense, right? But as someone who is just getting into buying stocks, to me at that stage, diversification honestly seems like more trouble than it's worth. And it is my opinion that if you are someone who is just starting to build your portfolio, you don't really need to worry about being super diverse just yet. I think first you need to build out the foundation for your portfolio, which brings me to the topic of this video. Today, we are gonna go through 5 great stocks that you can buy to use as the foundation for your portfolios. Essentially, we're gonna be building out a beginner's investment portfolio, if you wanna call it that. But either way, you guys are gonna wanna stick around to the end of this video, because at the end, we are gonna go back in history and see how this 5-stock portfolio has performed over the last 10 years, which is undoubtedly going to knock your socks off. All right, guys, well, that's about enough rambling on my part. Without further ado, let's get into it. All right, guys, stock number 1, we are gonna kick things off with AT&T, which is one of my favorite dividend stocks out there. Now, I know you all know what AT&T is, but what makes it such a great stock to buy and keep buying over time? I'll level with you guys in saying that the growth of AT&T could be a lot better. I mean, at this point, it's down 30% in the last year and down about 20% in the last 5 years. But where AT&T does not fall short is, that's right, its dividend. And to give you a reference point, I get excited about a stock that pays anything at about a 4% dividend or higher. And with that said, AT&T currently pays a 7.74% dividend and has increased its dividend growth for the last 20 years consecutively. That's pretty amazing. So not only does this stock cash flow like crazy, but it's also a relatively safe investment. And I say that because AT&T has increased its dividends over the last 20 consecutive years. And I do believe that trend will continue, especially considering the growth of the stock has been so stagnant over the last few years. The dividend is really one of the only things that makes this stock an attractive purchase. Anyway, guys, we can really talk a lot more about AT&T, but let's save that for another video, shall we? The next stock that I think would be a great addition to your portfolio is Starbucks. That's right, I know you guys saw me with my grande non-fat pumpkin spice latte in the last video. What can I say? That thing is delicious, and I'm trying to get this stock to grow, and every little bit helps. So, as I was saying, Starbucks is a great investment, guys. And right now, Starbucks stock is priced somewhere in the high 80s, which, is a little bit on the high end, I think. But if you think about it, do you really see Starbucks going down? Back in February, kind of around the time the you-know-what started, the Starbucks stock plummeted almost 35%, which would have been an awesome time to buy it. But since then, it's actually recovered and is actually positive about 3.5% overall over the last year. And I do believe just this year, it will continue to go up as we get deeper into the fall and deeper into the holiday seasons. After all, you know how those people get about their pumpkin spice lattes. It's no joke, stay out of their way. Those people mean business. And all joking aside, guys, one thing you need to ask yourself when looking into investing into these companies is, do you see it being successful long term? That's a huge question you need to ask. And if the answer to that question is no, then it might be a stock that is best walked away from. But, in this case, in the case of Starbucks, the answer is yes. It's a beast of a stock and it's a beast of a company. All right, guys, now moving on to stock number 3, we have Procter Gamble. Now, I really think Procter Gamble has got to be one of the greatest dividend stocks out there. It is like one of the kings of dividends. It's amazing. And to be fair, I'm not saying that because it pays a crazy high dividend. It only pays like, 2.25%. And the reason I'm saying it's such a great dividend stock is because it has consistently paid out dividends and consistently grown those dividends over the last 64 consecutive years. 64 years. Oh my goodness. I mean, I think it's safe to say that your Procter & Gamble dividend is at pretty much no risk of not being paid out. And that's also very important when it comes to buying these stocks. Having safe, consistent dividends that you can count on being paid out to you is very vital, especially if your end goal is to, live off of the income you make from these dividends. Because if those dividends get cut, you don't get paid. Anyway, guys, Procter & Gamble is a great long-term stock to buy and keep buying if you primarily invest in dividends, and it actually is not too shabby in the realm of growth either. I mean, just in the last year, Procter & Gamble is up by over 21%. It's just a great all-around stock to buy and keep buying, not only for solid gains, but for solid dividends as well. All right, guys, moving on to stock number 4, everyone's favorite company, the Big Apple. And I don't feel like I need to go super deep into this one, to be honest with you. But for starters, Apple is a great company and is known for having one of the strongest balance sheets out there. If you're looking at the stock, looking at the price and think it's kind of expensive, I mean, it's sitting at about $120 a share right now. But I'll tell you what, as a company, it grows consistently and it maintains profitability very well. And the stock in itself performs well too. And I mean, just looking at how it's performed, in the past year, the share price of Apple has risen by over 98%. In the last 5 years, the share price of Apple has risen by over 313%. And in the last 10 years, Apple has risen by almost 1,000%. And although Apple might seem like an expensive stock to buy right now, history suggests that the price is just gonna keep going up. And I'll tell you what, that is a train that I think we all wanna be on. All right, now last but not least, we have VTI, the Vanguard Total Stock Market ETF. Actually, I said last but not least, but this stock is definitely the least sexiest stock we've talked about today, I gotta be honest. But it's still a really cool stock and it's definitely worth holding in your portfolio. And VTI is an ETF that is comprised of a blend of different stocks and is designed to track and perform at about the same rate as the entire stock market as a whole. So for example, if in a given year the stock market is up 8% as a whole, we can expect for VTI to be up by about the same amount. And I'll tell you what, this is a great stock to buy, not only because it pays a dividend with 11 years of consecutive growth, but because it's comprised of a blend of different stocks, it's also going to be less volatile and probably less risky than if you were to put all your money in like Facebook or something like that. And like I said, owning 100 shares of VTI is definitely not as cool to brag about as owning like 100 shares of Apple, but it will help to balance out your portfolio and make sure you get some solid, secure dividends coming in, which is important. That's why we're here. All right, guys, now that we've broken down these 5 stocks individually, let's see how they perform when put into a portfolio together. And for that, we're gonna go to the screen. All right, guys, now what we are looking at here is a free online tool called the Portfolio Visualizer. It's just portfoliovisualizer.com. And what this allows us to do essentially is to build out a sample portfolio. We can put up to 20 different stocks in here, and we can see how that portfolio would have performed at any certain point in time. So what we are gonna do in this example is we are going to see how the 5 stocks that we've been talking about would have performed over the last 10 years. So from 2010 until now, how has that portfolio performed? So let's set the parameters up. For that, we are gonna set this start year to 2010, end year 2020, include year to date, yes. And then for the initial amount, guys, we're just gonna start with like $1,000. So cash flow, we want to contribute a fixed amount. I invest $400 a month, so let's go with that for this example. Contribution frequency, we wanna do monthly. So we wanna invest $400 every month. Display income, yes. And let's see how it performs alongside this Vanguard 500 index, which tracks, I think, the S&P 500. And I've already put our different assets in here. We have AT&T, StarBucks, Procter & Gamble, Apple, and VTI. And we're investing 20% of these funds into each of these stocks, so it's balanced evenly. And real quick, before we see how much it is in value after those 10 years, leave me a comment below. How much do you think it is? Do you think it's less than 100,000? Do you think it's more? Do you think it's more than 200,000? What number do you think this portfolio will be at after 10 years? Leave me a comment below, let me know. All right, guys, now without further ado, let's see how well this portfolio performed over the last 10 years. hit Analyze Portfolios. Oh my goodness. Okay, so starting with $1,000 and investing $400 every single month, with the stocks that we've talked about today, the final balance of your portfolio would be $149,589. Oh my gosh, almost $150,000. That's amazing. And looking here, it looks like the best year this portfolio would have had was about 50% growth, which is crazy. And the worst year it had, it was down about 3%, which I will take that. So as you can see, guys, this portfolio, these stocks that we've talked about today are going to do you no wrong. And if what we've seen here is any indication of what we're gonna see over the next 10 years, then buckle up because it's gonna be a wild ride and you better get in now. Anyway, that's super, super cool to see. I didn't look this up beforehand, so I wasn't quite sure how much it would come out to, but honestly, that's higher than I thought. I thought it was gonna be about $100,000, so happy to see it. All right, guys, well, that pretty much wraps up this video, you know. I think we covered a lot of solid ground today. And before I leave you, just a little side note on the things that we covered in this video. Obviously, there are many, many, many different stocks that are great investments. There's a lot of great companies out there. The ones covered in this video are just 5 of, like I said, many that you could invest in that will, you know, bring you some great returns. I encourage all of you guys to, you know, hit up that portfolio visualizer, plug in some stocks, build out some sample portfolios. It actually is a lot of fun doing it, just seeing how different things perform, and use that as a tool to start building your portfolios, and use that as a tool to decide what the foundation of your portfolios is gonna be. Like I said, these are just ones that I like, so the ones you like may be totally different, and that's okay. Anyway, guys, thank you so much for, you know, coming and watching this video. It's great to see you as always. And yeah, anyway, I hope you guys have a great day. Thank you so much again, and I will see you in the next one.